So earlier this week, we got this article from CNBC that basically says that the wealthiest 10% of all Americans own a record 89% of all U.S. stocks. And so I just wanted to go ahead and kind of break that down and share some insight into why that is. And hopefully this video will be able to better help you all not only understand, but become better investors. And so in my honest opinion, which I really believe to be true, the reason why majority of these Americans own, or I'm sorry, the minority, the 10% of the wealthiest Americans own 89% of all U.S. stocks is for one very simple reason. They hold stocks longer than the average investor. So these hedge funds who have trillions of dollars, I get it. They have more money than us regular working folks. We've got a couple $1,000s in Robinhood. These hedge funds have billions of dollars. I get that part. But there's also another part, and it's the fact that these hedge funds are holding stocks much longer than we are. And I'll give you a perfect example right here, because we know how retail investors operate when trading stocks. They tend to get very emotional and they tend to panic sell, which is part of the reason why I made this YouTube channel, to kind of teach how to handle yourself emotionally when investing so you can maximize your profits and make the most amount of money you can in a certain period of time. And so one example I wanted to bring up is if we just look at March when we had a correction, let's just go ahead and look at Tesla stock right here. So when looking at Tesla stock, Tesla went to $500 in March when the NASDAQ had a 10% pullback, when the NASDAQ had a correction. And Tesla pretty much went from $700-800 to $500. And in my personal opinion, I think a lot of that was caused by retail investors, because retail investors panic sell when corrections happen or when we have pullbacks. Hedge funds and long-term investors, or the top 10% wealthiest Americans, they hold long-term. They invest like Warren Buffett. They hold stocks for 10, 20, 30 years. They don't care when a stock goes down. And the reason why they don't care when a stock goes down is very simple. Retail investors tend not to really do much research. They buy a stock, they pay attention to the chart and the stock price, and when the stock goes down, they panic sell. But here's what the hedge funds and the top 10% wealthy Americans do. They don't really worry too much about the stock price. What they do is they pay attention to how the company is doing. They pay attention to the earnings calls and what the company is doing fundamentally. That's what determines if these big money whales are going to sell a stock. They could care less about a correction or a crash of the stock price. If the company is profitable and they're bringing in revenue and they're growing every quarter, they're gonna hold the stock. They're not gonna sell it. And so that's one big difference that I think can separate a retail investor from a hedge fund and make you all a little bit kind of like them. So that way you can maximize your profits and make a lot of money. So when investing in stocks, don't worry so much about the stock price. Pay close attention to what the company is actually doing. Pay attention to the fundamentals. Look at the 8K forms that are coming out with the company. Look at their 10K, look at their 10Q. Make sure you're paying attention to the company's quarterly reports. Make sure you're paying a close attention to the company's earnings calls, and that will tell you how the stock is going to do long term. And if you do that, you'll be able to maximize your profits, and you can, get kind of close to the area of where the 10% of wealthy Americans are, where they own 89% of all the stocks. And let me just say this too. I want you all to go back and look at your history. Go to your Webull, your Robinhood, and just go to your history and look at everything you bought and everything you sold. If you sold stocks just as much as you bought them, that's the problem right there. You're thinking like a retail investor. You're thinking like what Wall Street comes dumb money. That's how dumb money operates. They buy a stock, they sell a stock, they buy a stock, they sell a stock, they buy a stock, and then once a correction happens and the stock tanks 20%, they panic sell, and then they keep repeating that same process. What you should be doing is you should be buying more than you're selling. You should really just be doing mostly buying. You shouldn't be selling for years to come, because let's remember what buying a stock actually is. You're actually buying a piece of a company. And so when you're buying a piece of a company, you have to give that company time to grow and increase their profits and move forward as a company and beat estimates and grow. You have to give your company time to do well and do what you believe that company is going to do in the future. I mean, most of you all know I had Tesla when I was in college. I bought a few shares of Tesla when it was like $40, $50. And it was really hard to own Tesla back then because at that time, they were just running through tons and tons of money. They had all these setbacks. The media didn't like them. The media didn't like Elon Musk back then. And it was not an easy stock to own. But I stayed true to what I believed in with Tesla and I held. And in 2020, the thing went to the moon. Seriously, it just absolutely went to the moon. 2019, 2020, the thing just went to the moon compared to when I owned it back in 2016, 2017. And so that's just my main thing with you all. I really want you all to understand that a big reason why the wealthiest 10% of Americans own 89% of all the stocks is really simple, actually. It's because they buy and hold forever. They don't panic sell when things get rough. As long as the company's doing well, they're beating estimates, the company is looking good for the future. These big hedge funds and these big rich whales, the top 10% wealthiest people, they're going to hold forever. And that's really all it takes. So hopefully this is a lesson to you that the next time you buy a stock, whether it's ChargePoint, NIO, Tesla, Snapchat, Facebook, Apple, whatever stock you buy, make sure that you really do plenty of research before you buy the stock and make sure you're buying a company that you really believe in. So that way, when things get rough and when the stock is going down, you're not panic selling, Because when you hold, that's where the real money comes in. Remember, you don't really make that much money from trading. The real money comes from investing. Investing and holding a stock long term is where the real crazy returns come. I think I'll go ahead and wrap up this video. Just want to go ahead and talk about that. I think it's very simple. Top 10 wealthiest Americans, they hold stocks long term. Most retail investors, what Wall Street calls dumb money, we don't hold stocks long term. We tend to panic sell anytime a stock goes red. You got to stop doing that. Pay more attention to the company. Don't worry so much about the stock price. Watch what the company is doing. Pay attention to how management is handling the company, how the CEO is running the company, and you'll do well and you'll be able to get up to that, close to that level of where the top 10% are in terms of owning all the wealth. So hope this video really helps you all. I'm going to go ahead and call it. And feel free to like, share, subscribe. And thank you all so much for tuning in.